If your money is sitting in a savings account right now, you are getting poorer every single day. And I know that sounds insane. You were taught that saving is the smartest thing you can do. Put it in the bank, let it grow, be responsible. But the rich don't do that. They almost never keep serious money in a savings account. And it's not because they're reckless, it's because they know something the bank doesn't want you to figure out. Today I'll show you exactly what that is. The moment you deposit money in a bank, it stops being idle. The bank turns around and lends your money to other people, for mortgages, business loans, credit cards, at rates 5 to 10 times higher than what they pay you. You earn 0.5%. They charge 7%. They are making a fortune using your cash as the raw material, and they pay you almost nothing for the privilege. You're not a customer, you're the product. But the real enemy isn't even the bank. It's inflation. Prices go up every single year. If your savings earn 1 or 2%, but inflation runs at 3 or 4, your money is quietly losing value while you sleep. $1,000 today will buy you less in 5 years. You feel safe because the number in your account stays the same, but the purchasing power behind that number is melting away. The bank account gives you the illusion of safety while making you poorer. The wealthy figured this out a long time ago. They don't save, they deploy. Every dollar that isn't working is a dollar dying. So instead of parking cash in a bank, they move it into assets that outpace inflation and generate real returns. Real estate, stocks, businesses, things that grow, things that pay them. Their money is never sitting still. It's always out there in the world, earning more money on their behalf, around the clock. Take real estate. Instead of leaving $100,000 in a savings account earning almost nothing, a wealthy person uses it as a down payment on a property worth 5 times that amount. A tenant moves in and pays rent that covers the mortgage. The property appreciates over time. So the investor earns income, builds equity, and controls a $500,000 asset, all with the same cash that was rotting in a bank. The money didn't just sit there, it multiplied. Then there's the stock market. Over the last several decades, a simple index fund has returned an average of 8 to 10% per year. Compare that to 0.5% in a savings account. The difference over 20 years is staggering. It's not even the same universe. And you don't need to be a genius stock picker. You just need to stop leaving your money in a place that guarantees you'll fall behind. Even the most boring investment beats the best savings account. And then there are businesses. The rich invest in them, their own or someone else's. A well-run business can return 20, 30, even 50% a year. Nothing in a bank will ever come close to that. Owning a piece of something that creates real value for real people is the single most powerful way to grow wealth. The bank pays you to sit still. A business pays you to build something that matters. Now here's the excuse everyone uses. But I need my money available. What if something happens? And that's fair, to a point. The rich keep a small emergency fund in cash. Maybe 3 months of expenses, enough to sleep at night. But everything above that line goes straight to work. They don't hoard cash just in case. They use credit lines and leverage for flexibility, and they let the rest of their money earn real returns somewhere far away from a savings account. And here is the part that truly separates the rich from everyone else: compounding. Money in a bank barely compounds at all, but money in an asset that returns 8 or 10% doubles roughly every 7 to 9 years. Over 30 years, $100,000 in a bank might become $115,000. That same money invested could become over $1 million. Same starting point, same person. One chose safety, the other chose growth. The gap is everything. Here's the twist most people never see. The rich do use banks, but not as savers. They use them as borrowers. They borrow at low rates and invest at higher ones, pocketing the difference. The bank is their tool, not their treasure chest. While you keep money in the bank to feel safe, the rich borrow from that same bank to get richer. You are literally funding their wealth by leaving your cash there. Think about that for a moment. So how do you start thinking this way? First, build a small safety net. 3 to 6 months of expenses in cash. That stays in the bank. But everything above that line should move. Start simple. A low-cost index fund is the easiest first step. Then learn one asset class deeply. Maybe real estate, maybe a small business. The goal is to stop treating your bank account as a destination and start treating it as a launch pad. This is really a shift in how you see money itself. Most people guard their money. They pile it up, protect it, and feel proud when the number grows by a few dollars a month. The rich grow their money. They send it out into the world and expect it to come back bigger. One mindset hoards, the other multiplies. Same starting dollar, completely different lives. And the only difference between them is understanding what a bank account is actually for. So here is the truth the bank will never tell you. Your savings account is a waiting room, not a home. Money was never meant to sit still. It was meant to move, to work, to multiply. The rich figured this out generations ago, and they never looked back. You don't need to be wealthy to start thinking this way. You just need to stop confusing saving with growing. Put your money where it earns, not where it sleeps. I'm the money guy. I'll see you